Good morning, Armor Insiders. Enjoy the view of that chart pattern. Soak it in. We're about to make a lot more money today. Hope you guys had a wonderful weekend. We'll get to that chart in a minute. That's one of our highlighted stocks of the day. It's a virtual hedge fund. We're going to be talking about our three strategies: day trading the indexes, swing trading the indexes, and investing that we break into two pieces: our innovative stock portfolio, growth stocks, if you will, and then our portfolio of dividends and kind of turnaround stories. That's kind of how we put our capital to work. So those are our four disciplines. We call it Armor Investing. There's a particular strategy and approach to what we do that all boils down into one simple thought. I'm going to share that with you first because it really helps me with that moment of truth when it becomes, do I make an investment or do I not? Sometimes there could be so much noise around you, it's hard to make the choice. And it comes down to one question for me. I'm going to share that in a minute. Before I do, don't forget, virtual hedge fund. What does it mean? We're all managing capital together. You have your tranche capital, I have mine. We're all sharing information together, making ourselves better so we can be all more successful. But at the end of the day, you have to decide what your risk tolerance is and your goal. I can't help you with that. You got to execute your strategy. You have to be the smart money. Okay? So the number one thought that I use to get rid of all the noise around me when I make an investment, it comes down to this: is the reward worth the risk? If I think the reward to risk entry point is optimal, I'm putting money to work. It's not a question of all the noise around me. Well, will this happen? Will that happen? What will the earnings be? What this, that, that? These are things we don't know. These are things that get in the way of making a decision. You do all the research you can. You come up with an investing thesis, and then you have to execute it when the reward's worth the risk. And you have to accept the risk to that stop. That's it. What's the risk? It's how much am I willing to lose to the stop. It hits the stop, I'm out. So when I make an investment, and we're going to talk about some investments this morning, when I make that investment, I've already accepted the loss. I get it. It might hit my stop. Okay. Once I can get over that hump, and I've accepted it, I can start making money. So that's something for you to think about this morning. The first has to be China. We have been trading around the edges of China. We have a full position on Las Vegas Sands right in there in the green box. It's going to open above 55 this morning. So it's going to be breaking out of this base, and we own it cheap. KWEB, I came this close to loading up on it, and I just hesitated on Friday. And I said to myself, I want it to prove to me that I have to own it. It's making the base between the 61.8 and the 50% retracement of this initial stimulus explosion. The Chinese came out and said, we're going to stimulate to get the economy going. And KWEB and Chinese stocks in general exploded. Had a 61.8% retracement, which is classic on a Fibonacci retracement. This morning, it's going to open up around 8.5%. I added this position in the pre-market this morning. I've already added it. The first thing I did when I came in this morning. So I added it trading 33.70 right now. I added it somewhere around 33.40. I paid up for it, but I did it first thing this morning. This is the move I was looking for. The Chinese came out over the weekend. They had another bad economic number came out, and they reiterated more stimulus and easier monetary policy going into 2025. Now, we know how this plays out in the West. Will it play out that way in the East? I don't know. You know, I have a severe aversion to Chinese stocks that has saved me and anybody who pays attention to what I'm doing a lot of money over the years. A lot of money. But I do think investing in the country that's stepping on the gas of stimulus and rate cuts is something I should be doing. So I have to climb over my discomfort. And the way I do it is by considering reward to risk. The risk is the 50-day moving average. I pay 33 and change. Stock goes back below 31. I'm out. I lost money. I'm willing to accept that risk. Put it over here. Stop the noise about if and this and that and what'll happen with that. None of that matters. We have a major country talking about massive stimulus and rate cuts and easy monetary policy to get out of a major economic downturn. We know how that plays out if it's executed correctly. The reward is enormous. So the risk is to my stop and the reward is open-ended. I have to put capital to work. No matter how much I got to hold my nose because I don't like China. I'm going to do it in the Chinese internet stocks. I'm going to go with KWEB because I don't want individual names. And I'm going to own, we already do, Las Vegas Sands. We've earned the right to take more risk. We've got our Las Vegas Sands. We're making money there. We're adding another position. That's a part of my portfolio. And will I put on a huge position there? No. I'll put on an average position on my, so I have an average Chinese exposure. I'm not overexposed. And it really came down to, do I want a lot of China, or do I think that Chinese stimulus will spill over into another favorite sector? Hands raised. Who can tell me what that sector is? Okay. This is our precious metals page. We are still long Sprott physical gold. That's obvious. Sprott physical gold. We haven't sold it. It's in the uptrend. We're staying with it. I'm looking to add physical silver. And if it can hold on to the gains from this morning, I never buy gold and silver. You might ask me, well, you bought China. Why wouldn't you buy gold and silver first thing this morning? Because I never buy gold and silver when they gap up Monday morning. But I'll be looking for day trading entry points during the day. And if they hold up all day, physical silver will be back in my portfolio next to physical gold. And I'll start looking at what mining stocks do I want to. Now let's wrap up today's discussion with the highlighted stock of the day. I mean, it has to be Recursion Pharmaceutical. So for those of you who are on the desk with us on Friday, first thing, let's just go through the progression of how we got to Recursion, because there's a couple of Armor insiders I want to tip my hat to and say thanks. Little spotlight, okay? The first has to go to my dad, Silver Fox, who got everybody who wanted to pay attention to this in our Slack room on SoundHound. Dad's been on SoundHound somewhere in here, okay? Company announced earnings. He listened to the call, and he's been posting in the Slack room and during our live trading session that SoundHound had hit an inflection point, and it was something he was loading up on. The stock exploded, and that got me thinking. And I started looking at my favorite AI innovative niche company, which is Recursion Pharmaceutical, gone through a huge sell-off. Another tip of the hat has to go to Joel, an Armor insider who's been sending me direct messages ever since we started talking about Recursion. Joel, I moved away from it for a minute because it popped up and sold off. I said, all right, forget it. And you kept DMing me, and I love you for that, right? Because it really kept it at the top of my whiteboard. So thanks for that. All right. And so on Friday, when the stock crossed 7.25, which is right in the morning, we loaded up on Recursion. Okay. Right in here. And the basic thought was, first of all, it's a reward to risk situation, right? So what's the risk? It goes back to the low of the day. I'm out. This is a perfect cup and handle. So it was a breakout, shakeout, cup and handle, breakout again. So we paid 7.25 for it right there early in the morning. Stock ripped all day. It's up another 11% this morning, closing in on $9, which, as you can see, it hadn't even started yet. $9 is the breakout above the 200-day moving average. That's what the gray line is, the 200-day. The green line is the exponential 200-day. So you can see why I use both. Okay. I think the stock's at least a double from here if this market keeps running. And what I tweeted out, or on X, if you guys follow me on X, I sent out a message on X. And I said to you guys, look, if they're going to rip SoundHound and they're going to run Big Bear, then they're going to come after Recursion. Here it is. So let's just sit back and enjoy the ride. And this is a good time for me to remind everybody who's watching now, if you're not on our desk and you're not making that trade at 7.25, paid 7.5, I don't know, whatever, somewhere in the 7.25, 7.5 range. If you're not on the desk doing that, I'm celebrating today with everybody who did. This is not a call to go out there and pay up 11% and, pay $9 for it. The move's already happened. And if that frustrates you, I apologize. And I respectfully and humbly suggest subscribe and join us on the desk all day. One trade like this covers your subscription for years. Okay. So, that's the way to look at it. If you missed this, it's a highlighted stock. We're having lots of fun, but I do want to remind everybody, we have specific entry. We use algos for entry. I allow for about a 5% window in price. So if you see me post this anywhere on our spreadsheet, you see here's a new position and I post it with a price and you miss the entry. You have to make your own choice. This is not investment advice and all that other stuff that I'm supposed to say. Okay. So this is how I run money. But if you're trying to figure out what do I do with this information and you look at the price I paid, I generally allow a 5% window. Now, within 5% of that price is reasonable. Anything above that ain't going to work because it's all calibrated to the stop how much money am I willing to lose? Do you see what I'm saying? So if you pay up for it, and it has a bad day, to me, I'm just letting it work itself out. This is my stop. But boom, it could put you underwater. So please don't chase things that you see on the spreadsheet. I share with you the day we bought them and the price we bought them. And I allow for, if you want like a 5%, it's probably reasonable. Anything more than that, forget that one and get the next one, or join us on the desk and trade with us live during the day. All right. Listen, guys, I'm going to hop off now and set up our live stream. We'll start that at 9:30. Armor Insiders, I'll see you there. Armor Report subscribers, you're on your own. Any questions you want to ask me, throw it into the comment section. I'm happy to answer it. And here's a bonus for all Armor subscribers of any level. I'm here for you. Pick up the phone, give me a call if you want to bounce off ideas, if you want to think things through. I'm happy to do it. I enjoy doing it. 561-575-683. Everyone have a great trading session. At the end of the day, remember, you have to be the smart one.